While working as a software engineer in a fintech startup that builds an institutional brokerage that's designed to support complex trading, you get to hear on a daily basis and ultimately learn about multiple financial buzzwords such as SPAC, peer-to-peer lending, and ETFs. In this video, I'm going to tell you what exactly is an ETF in a simple and then more advanced explanation, and then show you how to buy one through a brokerage account. An ETF is shorthand for an exchange-traded fund. So basically, some people put money together to create a fund, and then that fund is used to purchase some asset. It can be gold, a stock of some company. So when you buy an ETF, you own a share, a percentage of that fund that is invested into some asset. If the price of the underlying assets increase, then the value of the fund increases, and by extension, the value of your share also increases. When you put your money in the fund, meaning you buy the ETF, you essentially are letting a third party to invest your money for you. Though it's not going to be someone random, it's usually going to be a credible financial institution like Vanguard or Fidelity. As a quick example, an ETF that you buy might be designed to follow the S&P 500 index, meaning that it would invest its funds to buy the shares of the largest 500 companies by market cap. So by you owning a share of that ETF, you are indirectly owning shares of these 500 companies. Now that you have got the idea, for a slightly more technical definition, an ETF, just like the name suggests, is something that is traded in an exchange. An exchange is a market where you can buy and sell financial instruments, and an ETF is just an instance of a financial instrument. Exchange markets, like any other market, are a place to buy and sell things. In a farmer's market, you buy and sell local produce. In an exchange market, you can buy and sell financial instruments, which could be a stock, an option, and also an ETF through brokers that represent you. You can't interface directly with exchanges, unlike in a farmer's market, which is why you need an accredited broker to act on your behalf. Exchanges that you have likely worked for are the NYSE and NASDAQ, which are private companies that you could work for that provide services that facilitate trading financial instruments. They allow you to trade stocks without physically owning them, and invest into ETFs without needing to call the institution behind the ETF, send them money, and tell them that you want to participate in the fund. Although they are private companies and not government agencies, at least in the United States, they are highly regulated by the government to prevent racketeering. In terms of financial instruments, these are contracts that are traded, each of which is tied to some asset, for example, a stock of some company or a commodity such as gold. It gives the rights to claim something to the buyer that pays for the financial instrument and the obligation to give away something to the seller who received the payment for the financial instrument. So there are many things that you could invest in, such as commodities and stocks or trade options. So why would you want to invest in ETFs? I'm sure you've heard that diversification is important to not have your net worth slashed because of a horrible year for a company that you heavily invested in. ETFs give you that diversification and make it easy for you. Instead of cherry-picking stocks to diversify, you're investing and reinvesting in a single stock that's already diversified and is backed by a financial institution that probably knows what they're doing better than you, all for the price of a small fee. The way I approach this is that any money that does not go to options trading or business ideas, or any money that I save that is not cash for emergency, I'll put it in an ETF like QQQ and forget about it, instead of keeping cash in a savings account that's just going to lose money over the long term due to inflation. Because what you can do today with $100 or how you can live with a six-figure salary is wildly different today compared to 20 years ago. Another reason for putting your money into an ETF is because for most of us, it's just like having a financial advisor managing your net worth, and it's virtually for free. Financial advisors will take a good chunk from your profits when you sign up for their services. Instead, put your money into something diversified, forget about it, and then keep all your profits to yourself. No offense to financial advisors, but tailoring a complex portfolio with different asset classes to someone makes sense when they're ultra wealthy. Until then, at least from my experience, financial advisors pitching their services will sound a lot like salespeople, because they cannot guarantee anything, let alone anything better than the average return of an ETF such as QQQ or VOO, excluding the fact that they'll also be keeping part of the cake. To buy your first ETF, all you need to do is to open a brokerage account, transfer some money from your bank account to it, and then you're good to go. If you don't have a brokerage account, I highly recommend you use a broker such as Charles Schwab rather than something gamified, minimalistic, or of a small broker such as Robinhood. I've talked about that in detail when sharing with you my options trading, and that is linked to the top right corner of this video. Before I show you how to do it, let me just say that opening an account with Charles Schwab is completely free. They have great customer support for any question that you may have, and their platform is powerful. So the more you learn about investing in general, the better you'll be able to start utilizing all that Charles Schwab has to offer you. They're not sponsoring me, but I have been a happy customer ever since buying my first stock through them. It's much easier to start using a broker that will provide you with all the services you may ever need, rather than using something super lean to get started with and then need to move your funds and your portfolio to somewhere else once you realize you need something less simplistic. And I know that because I had to do exactly that. To open an account, go to schwab.com and click on Open an Account. Here you will have several options, and you will choose the brokerage account on the top right to invest in stocks, ETFs, options, and so on. You will choose the individual brokerage account since you're creating this account only for yourself. As you can see, there are no minimum balances or monthly fees. Click on Get Started, and here you will enter your personal information, check a few marks, and you'll be good to go in minutes. If you're not from the USA, you can visit international.schwab.com to open an international account and follow the steps to open an account there. Since I already have an account that I transferred money to, I'll just go to my account and show you how to buy an ETF. I go to Trade and then select Stocks and ETFs, and then I write the symbol of the ETF. Regardless of the broker you use, you should be able to enter the symbol of the ETF you want to buy, just like the stocks you buy. To browse different ETFs, you can go to etfdb.com or simply Google the most common ETFs to get started. For example, I will go with QQQ. I will select the action that I want to perform, which is buy, the quantity, and then the order type, which I'll go with market since I'm ready to buy the ETF at the current market price. Then I will click on Review Order and make sure that everything looks good, and then place the order. Once the order is filled, which will happen almost immediately if you're buying at market price during market times, and you can check that in the order status or the equivalent in your broker's account, you will see the ETF on your account's profile and you will officially be an owner of your first ETF. And this wraps up the video. Thank you so much for watching, and please let me know down in the comments below if you plan on investing in ETFs or rather invest your money into something else. I'll see you next time. Bye.